Happy Monday. It's 9 o'clock. Welcome to the Pulver Report. Let's get started for a live session. It is June 17th. This week's trading June 17th through the 21st. Some interesting stats coming at you for the year. The S&P has notched 29 all-time highs this year. We've had, outside of April's correction, we've had mostly 1 to 2% corrections this year. We're sitting at all-time highs. All the forecasts are starting to change. I just read this morning headline news. I believe it's right here on marketwatch.com that Wall Street's new top S&P target is 6,000. Here's why. Interesting that it's now headline news. I'm not saying that this doesn't make sense. We looked at the charts not that long ago, probably within the last week. And I was looking at, let me go to the weekly time frame here. I was looking at this previous high from 2018, connecting the highs from 2021, and then projecting out towards 600 on the SPY, 6,000 on the SPX. So, I mean, to me, technically, it does make sense. The concern that I have going into these next couple of weeks, at least, would be just the timing of pretty overbought conditions. I mean, same thing we see right here. Pretty overbought conditions with divergence. This indicator, especially on higher time frames, doesn't set up very often, but it's there. So it's stretched on the weekly right there. It's stretched on the Qs. I'm surprised it's not on the Qs right now. It should be. I think it's on this chart. I still need to double check why that data point. There's NDX. So NDX on the daily and your Qs on the weekly and the NDX on the weekly. So we've mentioned this. This now goes, 3-4 weeks, a little bit further stretched. And that disagreement right here, disagreement sitting near all-time high. Again, this isn't me calling the top. I'm just saying the market, could you just pause for a little bit? Could we consolidate slightly? The gap that I would look to see price come back to would be at this point, previous highs around 450. I'm talking Qs right now, 450 pullback. If you go to the SPY, previous highs around 524. Or if we take a look into the daily time frame, we had our CPI gap last week that has still not been filled. I guess it'd be a little bit more concerning if we filled this gap from Apple earnings. That would have been back on May 2nd, May 3rd. But previous all-time highs right back here at 525, just below that 524 and change. But again, a little pullback would be, I think, understandable given the technical overstretch. But I went ahead and I've, bought some time in the markets looking to see if we have volatility over the next. I guess at this point, my expiration is July 26th. That's over a month out. And do we, stretch another $10, $11, $12? If we do, that puts us up into the 550s. If we get to 550 or 555, this trade will be nicely profitable. If we have a bit of a scare and let's say the VIX has a little bit of an event off the lows, we're trading at 1309, just off the lows. But to me, the concern on the VIX would be not so much steady here between, let's say, $12 and $13. But if we push into fresh lows again, last time we pushed fresh lows, we spiked up, right? Last time we pushed fresh lows, we spiked up. So all these little spikes here before we had a bigger one. And maybe it's something similar to that, where we have a little spike right here, consolidation, little spike right here, little spike right here, and then we have a bigger spike coming in the next, couple of months. Who knows? But even this, as we had that big spike up from that sell-off in April, was quickly corrected. And I don't know, makes me a little bit more nervous that this is now where the big forecast is heading. I don't know if this is to reinsure investors, if this is trying to, bait some safe haven fixed income investors to come out and get some exposure in equities once again. But look, if we get to 6,000, it's not a bad thing. I think that would be great for portfolios. It'd be an amazing turnaround story, but it would make me pretty nervous going into 2025, just because I think a lot of the positive stuff would be priced in. That's just my thoughts. So let me jump into the chat here. Say good morning to everybody. Good morning, Ruth Ann. Good morning, Gary. Good morning, David. Robert, good morning. Denise, good morning. Joseph, what's happening? Chris, what's happening? Good morning, everybody. And happy Monday. So we have a pretty interesting week. Let me see earnings-wise. Let's see here. S&P's notched 29 record highs this year. It's up around 14.5%. The S&P hasn't seen a dip over 2% in more than 300 trading sessions. So it is higher. And this is, I think I posted this in my Discord channel. This is a famous quote from Peter Lynch. More people have lost money waiting for corrections than in the actual correction. And that certainly seems to be kind of the vibe for this year. The market is not pulling back much at all. The market is just continuing to push and gap a little bit higher. We've seen it's been quiet. I mean, this is a 5-minute time frame, but in the background you can see these shaded areas. These are weekly candles that are shaded in green or shaded in red. I noted that yellow box, that was the Nvidia candle where we had that 1-day pop where Nvidia was up, but the market sold off aggressively the day after. But since then, we've had essentially 1 day of the last 2 weeks that have been directional and a big directional play. So last week, of course, it was Tuesday to Wednesday with the big CPI print. So that was a massive gap from Tuesday, Wednesday. And then this is Wednesday last week. This is Thursday last week. This is Friday. We went slightly softer, but we're just within a couple of points of those all-time highs on the SPY. Do we come back in and find a gap here around 537? Maybe. Do we break the highs again and just stick to really simple probabilities? Maybe. So that's what I'll be watching this week. Do we break the highs? Do we break the lows? Do we have an indecision week? Right? I mean, this gap might sit here. We might have this little CPI island gap where the bears would justify a breakdown and maybe fill some gaps and come back for a little bit more of a correction. I think that's due on the technical side. But if all we do is use the CPI gap as an opportunity to then buy some more, and then we're notching all-time highs once again. So a couple levels I'm watching closely. If we have that retest of the CPI gap, is that offering a demand zone or a bit of a floor to push this market back up to all-time highs? It's very possible. The one thing that has been an interesting disconnect has been the performance between the S&P, the NASDAQ, which have remained pretty much neck and neck with really good performance this year. S&P's up over 14%. I think the NASDAQ has notched over 16, 17% for the year, but the Dow has underperformed. We're back in single digits. I think like 2 to 3% for the year on the Dow Jones, and the Russell has been pretty much flat the entire year. So I think we're back to testing the April lows from the Russell. So not everything is bullish. S&P's up there, Qs are up there, definitely carried by the largest market cap stocks. So your Apples, your Nvidias, your Microsofts, those are doing most of the heavy lifting so far. We're going to look to see if this market can continue to sustain it. Okay. So let me get some chat going here. Let's see. History suggests otherwise. Today's VIX reading is entirely consistent with every multi-year bull market in the last 3 decades. Okay. I'll have some more news on this week, because I think that the biggest concern is the lack of market participation or the lack of market breadth right now. Like I said, it's essentially being carried by the Fab Four, and that's a concern, and especially not to see the other indexes participating. That's a little wonky in my opinion. So I'm not saying it's not a solid bull market, but it certainly feels like there are some potential fragile items on the shelves or under the hood or whatever you want to say. But that would be my concern, is that it's not just a unanimous, everything is easy, this thing is in drift, this thing is awesome, everything is fantastic. It doesn't feel that way, but I'm not here to argue with price either. Okay. Thumper saying, what happened to sell in May, go away? We actually talked about that. We talked about that, in May, and I think I shared a statistic where if you compared the all-time performance from the S&P 500 from, I guess it'd be June to, or what was it? Sell in May, go away. The idea was you sell in May, you come back and participate in October, right? So from May to September, you just don't participate in the markets. But the reality is, all-time performance-wise, you're looking at about 71% performance and profits on the S&P from May to October, and 72%, a whopping 1% differential from November to April. So it's more like sell in May and stay, because once the market establishes momentum, a lot of times May isn't a correction month, right? A lot of times it's just a drift and it becomes low volume. Maybe that's the lack of participation, but that's honestly helping a lot of these bull markets. Is when this market's put into orbit, it might be like is it sputtering in outer space, where it's still drifting higher, yet doesn't go down. So we can talk about that. Let me look at the Edge Finder tool here, because we've talked about seasonality, and June, July for the last 5 and 10 years are pointed to the upside. So I'll grab the Edge Finder Pro, and we'll take a look at seasonality. We'll look at each month over the last 5 and 10 years of where we're currently sitting. So I'm going seasonality, month to year trends, and S&P 500. So right here. So the histogram, you have the 5-year average in gray, you have the 10-year average in blue, and we have our current tracker up for the month of June, 2.73%. May was a big rip, considering we were down 4%. April came back almost 5% clip. I mean, the NASDAQ, for example, was a 6%, 7% correction, 8% correction, came back and eclipsed the highs with a double-digit gain. So yeah, it's been positive. I mean, 2.73 is above the 5 and 10-year average. 4.91 well above the 5 and 10-year average. We're sitting here in June. Is it going to hold the gains for June and still be above 1 to 1.05 to 1.25? Seems to be that case. Let me see if we have anything in earnings this week. I'll come back to that in a little bit. Let me go stock twits. Pretty sure this weekend. So last week's prices, NASDAQ was essentially flat, Russell down 1%, Dow Jones flat, -1.5, SPY was flat at 0.04. Let's see here. All the news this week. Okay, so we have 25 stocks reporting earnings. Lennar Homes is today after market. Lazy Boy, Kroger, Winnebago, Darden Restaurants, CarMax, FactSet. So probably not an earnings week for me. It was nice to pull a couple of earnings out last week with Oracle and Adobe. Those had some big prints and moved beyond the expected move, and it was perfect for a little option play. Plus the indexes were profitable as well. So pretty quiet on the earnings front this week. And a lot of the data is going to be pointing towards central banks this week. Here is, and it's really non-U.S. news. So we have Australia with a rate decision coming out Tuesday. This will be midnight, so it's 12:30 a.m. Eastern time. So over the Australia-Asia session from Monday to Tuesday. And 4.35 is the official cash rate, and that's the expected forecast for this print as well, which means RBA is looking to pause. We have retail sales for the U.S. on Tuesday morning, CPI out of the U.K., previous print 2.3, forecasting 2%. We have some prime rates from China debt. We have this, so this disappeared from last week. This is an odd number. I don't know if that was a misprint or if that was just something that they pulled the forecast. But Swiss National Bank on Thursday, 1.5% was previous. We saw last week that it was forecasted to show 1.38%. I don't know where they got that number. I don't know why it's gone right now. But I'd read also over the weekend that the Swiss National Bank by September is anticipated to be sitting at 1%. If that is the case, and they do let's say another 2 cuts, if they cut from 1.5 to 1.25 and from 1.25 to 1%, hopefully that would be some pretty serious monetary policy shifting from the Swiss National Bank. And I would love to see some weaker Swiss franc across the board, and that's been one of my bigger basket trades in Forex. So coming into this week, Thursday, it'll be interesting to see if anything changes with the current monetary policy from the Swiss National Bank, what the press conference says or reads, what headlines we see. I'll see that in Discord and watch that on Financial Juice. And then the same day, so we have kind of a Super Thursday event here with Swiss National Bank, and then we have Great British Pound, or the UK Monetary Policy Committee voting as well for a pause, expected to be 5.25% to stay at 5.25. If they come in with a surprise cut, that'll be interesting. Might shake things up a little bit on the pound crosses. We have retail sales out of the UK, and then we have a bunch of PMI numbers coming out in the Eurozone and the US on Friday. So, like I said, most of the news this week, outside of retail sales and PMI for the US, everything else, some key central bank rate decisions. We have been talking about monetary policy divergence over the last couple of weeks because it's been happening. Swiss National Bank was one of the first major banks to cut rates. Just in the last couple of weeks, we had the ECB cut, so the European Central Bank and the Bank of Canada both cut rates. The Fed, based on Jerome Powell's press conference last week, markets expecting a cut in September. Markets still expecting a cut in September. The Fed is going to stick to the very strict language to give the market no real indication. This was as high as like 68, 69%. You can see it's fallen back a little bit towards 58%, but that's still a fairly reasonable lead. 58% here, 35% here, 36% here. I would say that the market's still anticipating a cut in September. Now, this could be changing as we get through, June, July. This tool, and this is, you can say this, but this tool has never been wrong since 2009. Why is that? Because the Fed, kind of guarantees more transparency, and this tool changes all the time, up to the day of, FOMC. So that's why it's always right, is because it's constantly tweaking and modifying and changing. But for the most part, when there's a commanding lead, it tends to say that trend, and it's hard to kind of reverse that. But we have seen some pretty big shifts over the last couple of years, especially. We could argue that you're in uncharted territory with, whether the Fed's going to cut. Is it good for the economy? Do they have to cut? Why would they cut? Who knows, right? And my argument is, over the last, 20 years that I've been trading, a lot of times the Fed doesn't have a reputation for getting it right. So I still think that something in the background, and it might not be this year, right? This might be this perfect Goldilocks year where the Fed can do no wrong, the economy does no wrong, the Mag 7, the Fab 4, the top 10, the top 20% of stocks do really, really well. But the median stock does poorly. The underperformers continue to underperform. Maybe there's divergence between the NASDAQ and SPY versus the Dow and the Russell. But markets do their thing, and price is going to do what it's going to do. But the point is, we could still be sitting at all-time highs, but I think if something does end up breaking, that's where the Fed's going to step in and be more reactionary. I think the Fed has been very lucky to have this runway where they don't have to do anything. They went from emergency cuts during 2020 to the pandemic to stimulus to quantitative easing very quickly to plugging the holes with the Signature Valley, regional bank crisis we saw in 2022, or even when was Signature Valley? Was it 2023? Like early 2023, and the market shrugged it off? Pretty sure it was, because we got through all the deleveraging in 2022, and then early 2023, some bank failures, which, by the way, are still happening in the background. We have delinquencies and we have defaults climbing. I don't know. There's news, right? But that's also half the problem, is things get very noisy. So anyway, we keep trading. With all the bailout, unlimited amount of money, the Fed keep pushing up. Yeah, and also there's a lot of fiscal stimulus from the government as well. During election year, fiscal stimulus has been really a big contributor to why the markets have been drifting higher. The Fed really hasn't had to do anything. The Fed hasn't had to react to anything. So, like I said, you could argue that it's a Goldilocks environment. It feels a little long in the tooth. That's all I'm saying, right? I mean, to look at a chart like this and to see overbought conditions and divergence on the technical side on indicators that rarely show that. That's why I'm just a little bit like, okay, we could pause. And one thing that does happen too is the market doesn't always have to go up. The market doesn't always have to go down, right? We can have a period of consolidation. And that seems to be what the market hasn't done for almost 3 years, right? If not more. I mean, if you look back here since 2020, so we had pretty much plugged a hole at the Fed backstop end of 2018 into 2019. That was 2019. Okay, there's 2020. From 2020 to 2021 into 2022 into 2023 into 2024, where's the consolidation? It doesn't exist. And that's pretty wild to have a cycle of 3-4 years of trading and it's either all down or it's all up. I mean, I guess you could argue like, well, that's kind of sideways. It's not. I mean, that was a 25 to 30% correction. That's not sideways, and that was really volatile. So we really haven't had just a docile period of markets not going higher. So anyway, we're going to find out. But I was thinking maybe this summer could kind of ease up a little bit. We see some sideways movement, and then the market justifies something later, post September. We get into the election drama. Come November, does the Fed do anything in September to cut rates? What fuels the market higher? What fuels the market lower? But something, right? Something fundamentally is going to fuel the market, and we'll see if that's kind of how the major catalysts are drawn. But if it just keeps notching higher highs, I think that there's a couple things I'll still do. I'll enjoy lots of green in the portfolio, but I'll also be buying some inexpensive protection. I think one thing that I need to have rolling out to this year or going into Q1, Q2 of next year is having some hedging. I mean, I've got some exposure on the VIX right now through August. I'm happy to extend that out into January or probably through like March of next year just to be on the safe side to cover Q1. But it's actually cheaper to buy portfolio insurance now than it has been since before 2020, which is kind of crazy. So that's a good thing. And that's probably what I'm looking to do this week is just get it priced out. How much it's going to cost me? Maybe 1, 2, 3% exposure for some protection that could possibly serve as a way to fight a nasty spill in the markets where things give back. But I think I'm pretty well diversified from different asset classes and different sectors and things that are non-correlated. So I think, but I'm sure I could do more, and even having a little bit of insurance position wouldn't be bad. Okay. All right. The Fed is still trying to fight the spending from the Congress. Yeah, I mean, they are, but they aren't. I mean, are they really fighting it? Not really. I mean, if they want to fight it, then they would just raise rates more. They're not fighting it. I think it's making the Fed's job a little bit easier by them having a slight restrictive rate. I mean, employment has been ticking higher. I mean, we're sitting at 4% employment rate for the non-farm numbers that came out earlier this month. And is that creeping higher? Yes, it's definitely creeping higher. The lack or the slack in the job market, a little bit softening the job market is happening with the data. GDP numbers have been forecasted lower, inflation numbers. So that's what was weird about last week's FOMC is consensus-wise for PCE, core PCE, CPI, core CPI, all of the numbers for December of this year, end of this year, were all 1, 2, 3/10 higher than previous. So, I mean, we are in this like sticky inflation environment. I know the market's expecting a rate cut. Fed's going to push back on that until the day that they cut for the most part. But again, watch the CME watch tool. And if it still remains at, 60% to 30%, probability is it's going to be a rate cut coming in September. I think the market right now is anticipating 2. It's a pretty strong probability that there's going to be 2 cuts. It could be a September and a December. And once we roll into 2025, we'll see if that continues every quarter, 25 basis points every quarter, right? I mean, once the cut cycle starts, usually the Fed, historically has been pretty consistent on that. So it seems right now like it's data dependent, it's month to month, but I think once they start cutting, we'll probably start seeing every quarter they'll cut until they think it's appropriate to stop cutting. So anyway, requests coming in. Yep, MARA, we'll take a look. So let me do my thing first, and I'll take some requests. If you have charts and symbols you want to take a look at, currencies, stocks, equities, ETFs, crypto, just let me know. Just type in the chat for me. I'm going to take a look at. So we've got our SPY. We're down about 60 cents pre-market. We have our Qs. We're up about 10 cents pre-market. We have our Dow. We're down about $1 pre-market. That's what I'm saying. We're all over the place with these different indexes. We have the Russell down about 80 cents pre-market. We have the VIX slightly elevated off the lows, but we're talking about multi-year lows around 1158. We've been off of those, but we haven't had a big spike up. This is my VIX play. I've got a 1050 call out to August. I'm trying to see if we get a spike up towards $16, $17. Spike up towards $20 would be great. That'd be my profit target. If we go to dollar index, and we go back to the daily time frame. To me, this looked like the dollar's been trying to turn the corner and give us some bullishness. But even this last week, I mean, when we came into this was Wednesday, so this big red candle was Wednesday right here. That was Wednesday last week, Thursday, Friday, and then today's trading is still slightly indecisive. Look, if I can't get a daily or weekly close above 105.55, a daily or weekly close. If we can't close above that with the dollar index, I'm still not convinced we have direction on the dollar yet. Okay, so if this remains resistance and this remains support, this dollar could still be a big old mess. So not forcing any trades yet on the dollar. It does look like it. I mean, again, if we have direction, it would make sense that this is our trajectory on the dollar, pullback, and that trajectory continues higher. But summer trading, especially if we don't have a direction, we could be in a perfect environment for a lot of noise on the dollar crosses. And I'm just not going to force, a trend strategy on a non-trending index. So I want a little bit more confirmation. I want a lot more evidence on the dollar before I start taking basket-related trades. The FXY, this is the Japanese yen. We're sitting here near these, crazy lows again. This is something exposure-wise, man. I need to look at this week. I wanted to revisit this. We're at the halfway point of the year, and I know that I've said this for the last couple of months. I don't see the carry trade unwinding necessarily, but something tells me that if I could purchase the FXY, which would essentially mean I'm looking for Japanese yen strength. If I could buy this with a defined risk I could trade this with an option. I could trade this with a stock. I could own FXI, and actually that'd be pretty easy. I could own FXI as is and just throw in, maybe 1% exposure. And if we go from the problem is it's not a big gainer, right? I'm looking for options. I'm looking for maybe Japanese yen futures to kind of lever up the direction if I'm right. The problem is if I don't time this well enough with an option, I lose. I don't know how much lower we necessarily go, but let's just look at a percentage move here. So if I had let's say we go up here to $60. I'm looking at a move of like 3.38% to get back to these highs. That would have been the same correction we saw from 2022 into 2023. You're looking at a whopping 3%. So, it doesn't sound that exciting to me if this is the only thing that I trade to have some exposure on the yen. Now, I could start the process with a ownership position of the FXY and not trade options on it, not trade Japanese yen futures, because that's where the timing is going to be really important. I want to look at how expensive it would be to trade the option on the FXY and how far I'd have to go out. Because to me, I would probably trade FXI or FXY similar to what I would trade the TLT or any bond related plays right now. I'm wanting to go out to like 2026. I'm going to give this market, time to get through whatever it needs to get through this year. It can do no wrong, perhaps, and it keeps going higher. The Japanese yen might not have any major interventions for the rest of the year. We don't know that. But as we go into 2025, I feel like it would be very difficult for these markets to come out unscathed and still have this overall broad market perfection in 2025. I think realities, especially getting through an election cycle, having potentially a new administration or current administration with all sorts of realities to deal with. We've been talking about this inverted yield curve for over 500 days. October of this year is that 2-year mark. That's the average before we have that 3-month to 10-year inverted yield curve. If it all of a sudden gets out of that inversion and that recession reality hits, again, it's a historical kind of marker that I think needs to be paid attention to. I'm paying attention to it, so that makes me a little bit nervous going into 2025. So anyway, it's 9:30 opening bell. We're pushing a little bit lower here on FXY, but like I said, I want to price this out a little bit going into the next maybe year and a half. I know that's way out there, but I think I could start with some exposure here on FXY. And once I feel like I can get the timing right, then I might start looking at some options and Japanese yen futures to kind of lever up that move. So, this might move 3%, but if I could turn a an option trade into a 1x or 2x return that would help kind of juice that profit a little bit. We'll find out. So it's on the radar. I'll say that. And the UUP is the dollar. This is not something I'm looking to fight without some confirmation. This is the dollar related ETF you can trade. So I think right now, if the dollar is going to rip a little bit higher, or maybe it does, then challenge this high, challenge this high. I'd like to see if the dollar can, price wise, start to correct. And I don't know if it's going to hit new highs or not, but I will be watching maybe the structure here, right? Maybe the dollar rips up here, has a lower high and then a lower low. And that's another way to trade the dollar. Percentage wise, if we went from, let's say, highs around, $29 to $30, 29 to 30 made some fresh lows, you're looking at about 11 to 12% move on the dollar. I could get behind that. That's a nice way to trade that as well. Let's see, oil. Pretty stable here around this, high 70 zone. I still don't love it right now, but probably a trade where I could sell some premium on USO, depending on the implied volatility. But something where I don't know if we're going to get a lot of direction, but we might be able to do something, maybe just a safe credit spread. See if this is pop back up here, showing some resiliency. Oil doesn't want to dip at all, and it just kind of stays where it is. Maybe a little credit spread play we can look at this week on USO or oil futures for that matter. You can trade. It's /CL. Let's go oil, gold. Gold at 23.22. If it's consolidating, this is a pretty good support zone around 22.75. Resistance sitting at the all-time highs at 24.50. It is vulnerable to the downside. If we break below 22.75, there's room to drop. I've measured this out to like 21.50 to 21.25. I'd still be looking to buy dips on a trend line. You can see my support right in here. Support. If it holds that level, looking for support to continue to hold. Otherwise, I think we're just sideways, holding levels at 22.80, and then looking to see if we get to all-time highs. Once again, I still like silver better. Silver in a correction coming into this trend line. Again, support. Is this trend line going to hold and provide another nudge to the upside? I hope that it does. I think silver would be a great trade. I'm looking at some potential ownership on silver, 29, 28, 27, 26. Not sure what the expiration is, but it's probably coming up in July. And if I get assigned anything, I'm happy to own the shares of SLV and see this thing hopefully rip up towards $32 or higher. My break even would be around $27.50. Bitcoin and Ethereum. Bitcoin 65K. Let's see if we have a bear trap on Bitcoin, Ethereum. Maybe we don't have anything other than noise, but this trend line would be my support. So look at my support level, support here. This low, if we came into that same area, 56,000 is pretty critical. If we have a bit of a correction as a buyer, I'd be waiting for a trend line to break. And you really would not, you don't want to see a lot of damage happening below 56K at this point. I do see price capable of coming down here, but it better react aggressively to the bullish side. So if we do come back and test this low or test this kind of $55,000 level, if the bulls step back in, I think we're still able to maintain this posture here. If the the bulls are absent, then it would be a little bit more concerning. If we're sub 50K on Bitcoin, I would be a little concerned. So if we stay where we are, that's fine. Pretty well supported with a sideways range, but I think this trend line is going to act as some support and be pretty important here. Ethereum, same type of thing. Just sideways, watching these equal levels, set a trend line right in here, and just kind of chill for a little bit. Not much to do, just kind of waiting to see how price plays out. Demand zone, somewhere between this $32 and $2,900 zone. If this was a choppier area, something like that, or you draw a trend line out this way, pretty well supported, right? I could probably just add that to my charts versus just freehanding it. So let me take a trend line here. There you go. So if we hold those levels, hold this trend line support, as long as the bears don't break the structure below 2,900, then I think Ethereum, still looks good to the upside longer term. Okay. All right. So I saw MARA earlier. That's Marathon Holdings. That's a mining company. I am out of the mining plays. So I do have some Bitcoin exposure. I have some Ethereum exposure. I have some ETFs with IBIT and BITO for Bitcoin. I have what is it? FBTC. It's Fidelity, and it's BlackRock, and it's ProShares. Those are the three that I have. BITO is the one I can trade options around. The other ones are just some ETF exposure. And then if Ethereum approves their spot ETFs, then I'll probably get a little bit of exposure there as well, probably 1%, probably 1% on Ethereum. Anyway, but holdings wise, digital holdings, this is a stock I've watched. It's not behaving the same way, right? We poked all-time highs on Bitcoin, and we're still way off those levels. Now, some might be arguing that that's a catch-up trade. Maybe it is, but I'm not gonna. I don't know. I'd rather not trade them. If you like them, then I would possibly do some option related plays where you can own it cheaper. If you want to own it, I'd say anything below $15 is worth maybe a speculative play. If there is the catch up trade where we come back down to $15 and you can, own it sub 20 and lower your cost basis, I mean, sure, we have upside potential like crazy, right? I mean, that's 100% upside if we get from $15 back to $30, $32. But for this to not look at all the same, I think it's a broken correlation right now. And maybe most of the play is speculative and it's ETF related, as opposed to the the digital mining, the energy intensive mining. So Marathon, and I think Riot was another one. Those are a couple I've had over the last few years, but I've gotten out of these positions. A lot of these were owned around $20, and once we had this rip up here into like 20s again, I sold some calls, got it called away, lowered the cost basis enough that I just wanted out of the trade. It wasn't making me money compared to everything else. So I don't like it, and I don't understand why it's not performing the same. So I'm not looking to speculate on it. I'll just kind of keep my exposure of holding the kind of underlying asset. Okay. All right. That's MARA. VRT. Take a look at VRT. VRT is what? Here's a snowflake analysis of it. I've not heard of this stock, so let's go VRT. And Marcus asking about Swiss crosses. That's fine. Swiss will have some news this week with the rate decision on Thursday. So there's definitely going to be some volatility around the Swiss. I would love to see them cut rates from 1.5 to 1.25 if possible. I just don't see a forecast. But if they do cut rates and their path is still dovish or looking to cut rates by another 25 to 50 basis points, my Swiss trade to me is alive and well. The market might still run with this carry position. So that's still what I'm planning on. I'm still liking those Swiss crosses. Yeah, man, VRT. That can't be right. Vertiv Holdings. Is this the stock? Is it Vertiv Holdings or is it something else? Let me see if I have Vertis Health. Okay. So this is what I see just from a snapshot. Earnings have declined. Shareholders been diluted. Unstable dividend track record. Earnings grew. Price to earnings below the healthcare average. So this is healthcare industry, and this is a non-U.S. play. VRT. Is this right? And an AI play. Well, not according to this. It's not. The ticker VRT. This is Vertis Health. Let me see what else you have here. Vertiv Holdings Company. So I've got Vertis Health, Vertis Holdings. Maybe this is. Data centers, communication networks, commercial, and this must be what you're talking about here. This looks a little bit better. High level of debt, insider selling, earnings grew by 241, earnings forecast to grow 30%, trading below estimated value. So I've not heard the stock, played the stock, but I would say as of right now, if it makes some sense, maybe that's a little bit too shallow. So I think something like that. If this market's capable of a pullback, I love a pullback. I think that if I'm going to get long and stay long, then maybe that's going to be a trend line break. I would just wait. See how it plays out. Look, I think if you're speculating on AI, I mean, I think you know what to play. You got to be in semiconductors. If you're going to play AI, you got to be in semiconductors. Nvidia literally had a 10-for-1 split and is up $10. That's the equivalent of a $100 move, and it was after a split. So, um, I think this space, it makes sense that everything semiconductors does well or everything AI does well. But right now, look, the AI space that's doing well. I mean, look at Adobe, for example, for last week. Okay, Adobe mentions AI. I mean, Adobe is a, a, a software that we've all had since. I mean, I've known of Adobe since college, right? And they're around and they're in everything, and it's full of um, novice editors as well as professionals. But they mention AI with their tools, and all of a sudden, this thing just rips to the upside. Um, I don't know. I'm look at it this way. If you played every EV stock for the last couple of years, how are they doing? If you played every blockchain stock for the last few years, how are they doing? So I don't think that every AI stock, every AI play is going to be the best thing ever. Um, I just, if you think about how this market seems to be constructed, it's that the cream rises to the top. This is one really effective thing of having ETFs. If there's an AI ETF, which I want to say is that BOTZ, BOTZ. So BOTZ is an artificial intelligence ETF. So again, what is this made up of? Well, I go through the ETF and see what are the holdings. If this is a lot of Nvidia, it's probably okay, maybe. you know, but a lot of times when a market goes up, 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 it rarely corrects sideways. So just be careful. I don't know. Um, anything look if I don't know what the stock is, if I'm not in the stock myself, I'll give you a very objective opinion of it. That's a snowflake analysis. If it makes money, has limited debt, if it's trading under analyst expectations based on a discounted cash flow model, it looks okay. I mean, I'm all about building value in a portfolio, but I don't like jumping onto themes. If the theme is AI, right now we can kind of see who's winning that race. So I'd rather ride the so to, the horse, if you will, that is crushing it right now, as opposed to thinking of it like what's AI that's underperforming, what's AI that's dirt cheap. Well, those might be terrible companies, you know. So I think about it. I mean, the big themes this year, late last year, it's been AI. Before that, it was EV. Before that was blockchain. I mean, before that, it was who knows. I mean, every couple of years, like the market gets behind these big themes, and not every stock does great. It seems like AI could do no wrong. The semiconductor space, the SMH, right? Your semiconductor ETF looks like it can't do anything wrong. I mean, this is a crazy rip, but again, daily time frame overbought conditions. Last time we saw the indicator there, it had a correction. So this is why I'm like, sideways would be fine. Sideways would make some sense. If we just keep going higher, great, right? It makes trading easy, but it doesn't mean that I'm not playing defense in the background a little bit, because I do know that the market doesn't go up forever and the market doesn't trend forever. And the fact that we have not had really a decent consolidation period for over 4 years, that wouldn't surprise me if all of a sudden the market's like, okay, we've priced all these things in. Now what's the next big catalyst? And maybe that's what's missing. Maybe this year there's enough out there to let this thing drift for a while and it stays pretty bullish. But like I said, 20 plus years, I've not seen the Fed get it right all the time. And certainly they probably have more of the reputation of having things break and reacting. And that's probably the next big move. Whatever happens, that's going to break a market somewhere, whether it's the bond market, the inverted yield curve, the stock market, the dollar, who knows? But if something breaks and the Fed's there to fix it, we have to find out if it's effective. I mean, for right now, it's like the Fed shows their hand every time we've had a crisis. They just pump money into the economy. They print more money because they can. If at some point that doesn't take hold the same way it's done the last 20 plus years, we got bigger problems. So anyway, all right. Is net a ticker? Cloudflare. I mean, I like the support here around 40 bucks. If we had this, 116, that's pretty volatile. 116, I mean, it's down 40, 50% right here. Yeah, 42% off those highs. If this is the ticker, I'm way more intrigued in maybe that $40 to $45 zone versus now. If we break a trend line, sure, maybe, but I don't know. Ideally, I just look at something like this and say I'd love to see it hit 40 bucks again. This seems to be a range that could play out. So I could be wrong, but I'm just really picky on stuff that I don't know. So, all right, let's get to currency pairs. We'll quickly run through. My directions haven't really changed a lot. I'm still long Aussie CAD. I'll just go through the positions here. So I'll give you directions, right? Aussie CAD, I'm bullish. Aussie Swiss, I'm bullish. I want to show some of these Swiss crosses. We've had some nasty pullbacks over the last couple of weeks with another thing. Dollar's been stronger. Swiss has been stronger. We've actually seen some risk off flows in the currency markets, yet the stock market's sitting at all-time highs with your SPY and your Qs. Another disconnect. Can the Swiss weaken? Sure. If we have a trendline break there and we see higher highs in the Aussie Swiss, why would that be the case? Possibly because the Swiss National Bank cuts rates. We'll find out. Just my thoughts. I'm still going to hold on the Swiss crosses based on the technicals. Yen crosses. I'm not going to trade Japanese yen in currencies. I'm probably going to trade the FXY or trade some futures in the Japanese yen, try to time it. I'm probably looking out to 2026 just to give myself a big old window and have a very manageable risk and say if I'm right on the yen, maybe it's a 1% exposure that can make me 2, 3, 4% net as a little hedge. Something like that, where it's like it's just a play, but I do think there is some asymmetry in the yen crosses if we start to see the Japanese yen really snowball into strength, and it's not a good thing. I mean, another thing that the markets have been doing, the S&P has been higher, but look at the Nikkei 225. We haven't made a higher high since March, right? Look at your FTSE, look at your DAX, haven't made a higher high since May. Your DAX, your German stock market, haven't made a higher high since May, right? Lots of disconnects out there. So, again, SPY's fine. Qs are fine. I can see a correction. We're overbought. We're overextended. We haven't had the market really dip at all. So that's what I'm watching. Lots of stuff. Lots of stuff on the radar. So anywho, any other thoughts, any other questions, any concerns for today? We good? All right, let me take a look at something really quickly here. And today is the 17th. Okay, so I'm going to wrap things up here in just a few minutes, and it looks like I'll be joining the A1 trading team around 10:15 a.m. Eastern time. And you can just come back to the channel here. I usually dual stream with them, so if you want to come back to my channel around 10:15, I'll push it again. If you're in my Discord group or Discord channel, I will push that as well. So when I go live on YouTube, it's right here. So the link will be available for you in my Discord. If you want to join my Discord, per usual, let me post a link in here. So I'll go free group chat, not edit channel. I don't need to edit it. I want to send an invite. Let's go edit invite link. This will not expire. And I'll do a new link here, copy. And in the chat, this is join my Discord. So there's a link right there if you want to join. Free group chat. This is the best place to find me every single day. So once you come in here, free group chat. When I go live on YouTube, it pops up here. Every Friday, I post a blog. Anything I post on Twitter, any interesting analysis, news, all my education from trading rooms to robots to private instruction, all right here under these threads. I'm out there with some partnerships in the industry between brokers and charts and software, dashboards, you name it. What I think has been helpful for me as a trader, it's all right there. And then top weekly picks as well, real time news. And then also we try to shame the scammers out there when I get contacted by, hey, looks like you're contacting me. You've been talking to me for the last couple of days. No, it's not me. Vocalize all that stuff in the free group chat. But if we have anybody we can kind of smoke out, we'll put them in here in the scammers chat. So I hate the fact there's so many imposters and scammers, but that is a reality when, I've been doing this for a long time and people like to pretend to be me. So, in fact, funny story. I think this is where I'm at right now. I just had a text message from Rob Booker last week. Pretty sure it's fake. A text message, not some random telegram, not some random email, a text message. And how do I think it's fake? Because anytime I get into something personal, like I've known Rob for a long time, get into something personal, all of a sudden that text message thread goes silent. So pretty sure that's fake. So Rob, if you're out there, I know we haven't talked. We haven't talked in a while, and that's another thing. Is like, hey, I'm free to catch up. You want to talk? Nope. It's like I've known Rob for a long time, and if we truly do connect, then we'll talk. But anyway, funny stuff. You just got to watch that crap. It's bad. Let's see. Selling off on the QQQ. So you're in the MNQ. Are you in? Is a future trade for you? Yeah, you're in the micro, right? You're in the mini futures. Yep. So I don't have a feed on TradingView, but I have a feed in my Tasty Trade platform. But we're getting a little sell off here. Let me go into. Let's go SPY really quickly. I'll go back to dynamic trends and I'll wrap things up here. Let's go dynamic trends right there. So 541.95. Again, I'm looking for a bit of a gap fill. I do have a trade that could be really interesting this week. I'll show that before we go, and then I'll come back in around 10:15 with a live session. So let me float this out here. This is SPX on the day. The biggest level that I see right now is around this 5,400 handle. If we go to the SPY, let me look at pre-market. So bulls still seem to be clinging to these upside movements around 545, 544. But if I look at the real time, you're starting to see a lot more of the downside. You've got a 55-12 in favor of the put sentiment versus calls. A decent sized correction. I mean, the gamma levels aren't massive, like 248 to 193 to 242, but the sizes of those are starting to line up here and light up a little bit to the downside. So it's pretty simple. I mean, Mondays are typically pretty quiet, pretty range bound. The market usually stays within or less than the daily trading range, which right now is around like $4 or so on the SPY, around 40 points on the SP. I think it's 47 points in the SPX. But if I could put in, let me see if I could do this right now in the SPX. I might be able to put in, it just depends on the implied volatility. If I put in a bear call spread at 54.50, let me see if I can get this up here right now. Maybe a bear call spread at 54.50 today, and see if that market will stay below the highs and maybe grab a few bucks this morning. I'm going to try to get 30 to 50 cents on it if I can. If I can, I probably won't take the trade. But if I go back to my charts here, this is an important thing to watch. I'll get into Tasty here in just a moment. So let me log in. Okay, so Wednesday, Thursday, Friday, very little actual opening bell, closing bell movement. You can send that 9:30 to 10:30 range all day. Friday, bit of a fake out, but we didn't really push any higher. So my point is, if we stay here for, this is SPX. This is last week's low. Okay, so we have the high from last week. We have the low from last week. Price is sitting right here at 54.22. If I look at today's SPX and I can put a bear call spread above the high, maybe I can get a decent amount of premium. Maybe I can't. Depends on the IV. So let's get the dashboard out of the way. And let's go SPX. Let's go trade. Here we go. So this is going to be looking at a 0 DTE for today, 54. So 54.47. I could possibly tighten this up at 54.45, but obviously I'd like to be a little bit safer if possible. 54.50 70 cents. Stretch that by, I mean, I can make 50 cents today, but I'm risking 950. I mean, the probability is very high. I think I need to, it's a 90% probability profit for today. That's a lot of risk for a $50 win. So I'm probably not going to take that. That would tighten it up a little bit, but now I'm going to make less credit. 30 cents, 25 cents, tighten it up a little bit more. That's not bad. If we test the high but don't close above the high, let's find out. Do we test the high? Well, let me use this instead. So if I go back to this trade, this is a trade that I'm watching for this week. So I'm in the SPX trade. This is a call condor that I have running, and I'm in my sweet spot right now. I do have until about 54.35 and change before this position takes on any risk. Right now, it's kind of in a max profit zone, but I can't close that yet. I'm starting to get a little bit more profit rolling in. Ideally, if the market does sell off a little bit, this helps my position a ton. This trade's going to pay me about 45 cents credit. That's what this is over here. That's 45 cents credit. This is my peak where my bull call spread is in full profit and my bear call spread is in full profit. That's right here. So if I do get this spot on where I have this, maybe 10 to 15 point window here, this trade would pay about $5.45 credit. So it'd be great, but I need to see price be very quiet this week and stay within this range, or ideally, obviously not risk. I don't want any risk on the trade, so I'd like to see price fall a little bit lower. And I mean, if I walk away with 45 cents, I'm fine with that. But obviously, if I can take more profit, that'd be good too. So let me take a quick look at this on the SPX. That is right here. Positions, SPX. This is the whole trade. So 1, 2, 3, 4, close. Yeah, so I'm upside down about $1 right now in the net position, and I'm gonna close out Tasty and reopen it. Looks like it's giving me some weird stuff. So close this down. But I'll be watching that trade pretty closely this week. Hopefully it's if it works out well where price stays right about where it is. If we struggle to take out the highs this week and we stay right about where we are, we have an indecision week. That could be fantastic for the old SPX trade that I have. Okay. All right. I'll do this. I'm going to let you go for right now. Just take a small break on the Pulver report. We'll come back here in about 10 or 15 minutes. Again, if you're in my Discord channel, just follow the link through the hashtag YouTube channel. But I'm going to jump in with A1 Trading here in a little bit, and we'll go off for another segment. I'll take more requests. A lot of those sessions. A lot of people ask about the dollar, gold, oil, some of the major things, which we'll review all that, and then I'm going to get a little bit more into my trading platform as well. So. All right. I'll let you go for right now. Come back in about 10 to 15 minutes, and I'll see you in a little bit. All right. Thanks, everybody. Bye.